Good morning, ladies and gentlemen. Thank you once again for joining us for our webinar titled Modernizing BFSI Salesforce for a Digital Era. Of course, special thanks to the speakers for sparing their time today and OneSpan for sponsoring this webinar. Now, it's no secret that the BFSI sector has gone full throttle on digital transformation across its various lines of businesses. While digitalization brings forth an obvious wide range of benefits from cost to scale to ease of access, there are still some high touch services that some argue still require the human touch. And I think this is especially the case with the high net worth individual segment, the insurance segment, and a few other lines of businesses within BFSI, where there is a degree of complexity to some of these products. But that doesn't mean this distribution channel can't be modernized to be more efficient and to create better customer experiences. Joining us today to discuss this topic, right on top, we have Rohit Nambia, who is the Group Chief Executive Officer for Teen Protect Group. Below Rohit, we have Nigel Stewart, who is the Managing Director for OneSpan Australia and New Zealand. Below Nigel, we have Tom Gardner, who is the Executive Director, the Head of Sales for Financing and Security Services in Hong Kong Financial Markets for Standard Chartered Bank. Glad I got that mouthful all in one sentence. And below Tom, we have Ian Lloyd. Ian is the Chief Digital Officer for Kenanga Investment Bank. Gentlemen, welcome to the show. Thank you for joining us. So glad to have everyone here. Now, maybe we can start the session by gaining an understanding of how much of your revenue is generated from digital channels versus physical channels. Maybe we can start with Rohit.
See, obviously for us, as you know, we are a digital insurer. So we do have a traditional channel, but I would say roughly 60% of our business comes digitally. 40% comes through other means. But even the traditional channels, as you know, are changing a lot, and it's more and more digitized in that sense. So it depends on your definition. One could argue 100% of our business is digital because we have zero paper in the organization today. So it really depends on how we define what's digital.
So would you say it's 60% fully digital and 40% digitally enabled? Is that a correct?
Yes, with actually someone facilitating the sale process.
Yeah. I think it's interesting, even for a fully digital insurer, there's still some degree of human intervention
Yes.
required. We're even seeing in other markets fully digital insurers acquiring insurance agents to kind of expand their distribution channels as well, right? So that's an interesting kind of thing that we're seeing happening. Nigel, with your experience with your clients, what are you seeing? Are you seeing mostly digital revenue coming from the digital channels or the physical channels?
Yeah, look, I think it's certainly historically been on the physical side, but with the pandemic happening a couple of years back, then that certainly forced businesses to move into see what they could do from a digital perspective, or if they weren't already doing it, it fast-tracked the capability. So I think it's starting to balance out now. I think many of our customers, if they're not already, seeing larger amounts come from the digital, they're trying to move to that channel because it's more efficient in the long run for them.
All right, thanks for that. Let's move on to Tom. Tom, how much of your sales and revenue come from digital channels versus physical channels?
That's very, very easy for me to comment on, and the direct answer is zero. So the deals that I'm responsible for in the bank are highly complex, can sometimes take several years to close, with a deal value up to about $50 million US. And naturally, that level of complexity and spend requires a lot of in-person human engagement. In previous organizations where I've worked on the fintech space, when we had smaller deals around the sort of the 25, 50K value, then those who've had purely digital channels. But once they sort of creep towards 100K plus, there certainly is a physical presence that's required.
Thank you for that. Yeah, of course, the higher complexity, the product, the more consultative selling is required, the more human intervention is required. I think where digital thrives is where it's a mass market, high volume kind of product distribution model, right? Thanks for that, Tom. Sorry, do you want to add something? Go ahead.
I was going to say, yeah, but I do think that
Mm.
digitization has a huge part to play in the
Mm.
sales process, all the way through from origination through to contract closure and contract negotiation. So I think it is a significant part of what we do. But I don't think sort of in the area that I work it will be replaced, but it's certainly going to grow and it's going to be an increasingly important component.
No, certainly. I mean, these kind of tools can ease and empower some of your sales and advisory team to be able to better serve the clients, right? And I would
Exactly.
love to dive deeper into that as well to understand what kind of tools, what kind of technology that's being used in Stanchart right now. But in the meantime, let's move on over to Ian. Ian, what is the distribution like? What digital versus physical in Kananga?
Sure. So actually, just like Rohit, Nigel, and Tom said, we got a mix.
Mm.
A lot of it now is digitized, as in it's digitally enabled and supported. So we have a very large agent and remiser sales force, and they're all supported by digital tools. Like Nigel said, pandemic hit, we just flipped into digital mode and continued working no matter where we were. But also a bit like Tom, we have some really complex products. We're an investment bank, and we cater to what our corporate clients and our high net wealth clients need. And sometimes they need that specialized touch, that specialized service that can last. We don't last nearly as long as Tom's do, years, but that special touch does take a while, right? It does take a while to make that work. So it's a bit of a mix. Now, we are very interested in how we can do more through digital channels. How can we do more self-service for our customers? How can we make wealth more accessible to our customers? And that's where we've embarked on joint ventures with like Rocket on Trade or Tokenize, which are almost 100%. Actually, I think they are 100% digital at this point. So it's a bit of a mix. We're exploring what makes sense, what works for our customers. We're just trying to be where our customers want us to be.
I mean, I think it's interesting, right? That you have several distribution channels, and it's not to say that Kananga is not pushing for digital transformation, because you are moving towards creating a super app. You have, as you said, your partnership with Rakuten, which is the first fully digital equities broker in Malaysia. So, it's interesting to see the different kind of markets and the different kind of distribution channels that Kananga is focusing on. Maybe let's dive into some of the tools that are being used to kind of help some of the salespeople, the agents, the advisors to be able to better provide a human-driven experience through digital tools. Maybe we can start with Rohit. What kind of tools, what kind of technologies are being deployed in Tune to empower some of these things?
I think the first thing is obviously there are point of sale systems which enable this conversation with the customer when our distributor meets them, and to facilitate that. I think broadly we need to divide distribution into what I call two types of distribution, even in offline distribution. I'm not talking about the direct to consumer because they come to our website and just buy, right, or mobile app. One is there is a partner out there who are heavily digitalized, like your aggregators and insurtechs and e-commerce players, etc., where we sell frictionless embedded insurance, where you link in. There's no real advice there. On the advice side, yes, we have point of sale systems, but I think also the way things are moving now in insurance, I've spoken quite a bit of what I call agency 2.0, where I do believe that in the next 5 to 10 years, there will be far lesser number of agents in the industry, but generating far more value than they did earlier. The reason being they're far more productive. They don't need to drive the car in KL traffic, find a parking slot. So if you look at the activity ratios, they were probably doing 4 meetings a day. They could do upwards of 10 meetings a day today. And a lot of the simpler products, even they are able to offer fully digital. They just send you a link and say, just go here and buy. And when they need advice, they can give advice. And because there's a lot of integrated selling happening, there are tools out there where you can sell through Zoom, and you can, in the Zoom itself, complete a sale process. And with aspects like eKYC, the whole process has gotten much smoother. Not because Ian and I work together as partners, but I am a customer of Rakuten, and I joined Rakuten at the peak of COVID. I sat at home and submitted everything, and I was on it, right? And I never took any effort to go anywhere. So I think in a way, I still had someone respond to me on queries. There was somebody in an email responding to queries. But I think the world has changed from that perspective of you have to meet someone physically. In fact, it's a pain when somebody tells me they want to meet me physically. And I'm trying to tell them I don't have the time in my calendar. Instead, can we do it over WhatsApp or video call? So I think that's how the nature of the game has changed in my view.
I think if these days anyone wants to meet physically, it's just for a beer, right? I mean, business meetings,
I
I
agree.
think is
Or just
it's
network.
just
Right? Yeah.
yeah, it's just far easier to be done over Zoom. But of course, while digital tools can enable this form of virtual selling, there are still some compliance challenges, being that we are in the BFSI industry, right? I mean, it's not as simple as buying a product on e-commerce channels. There are still a lot of requirements that regulators will need the players to fulfill. So maybe we can jump a little bit back into that aspect of compliance further into the conversation later. But in the meantime, Nigel, but let's have Tom. Tom, what are some digital tools? What are some technologies that is being deployed in Stanchart to support this highly complex selling process that you have over there?
No worries. Let me cover that in a second. And apologies, I can't actually hear Rohit. But there's something that you mentioned that I've got a sort of a different view on that. I certainly drive in my sales organization, and that's of with COVID, obviously. A lot of people now are doing lots of Zoom meetings, and I encourage, for all meetings, that every single meeting that we have should be done in face to face. And I think the relationship that you can build with clients face to face versus virtual is far more powerful, and from a sales perspective, far more advantageous. So that's something that I'm looking to do within Standard Chartered Bank. Going back onto the tool side of things. Something that we're rolling out is our new CRM X platform. And when you're the size and scale of this institution, and you've got so many touch points within an organization, whether it's an insurer, an asset manager, a pension fund, etc., it's really important that as a sales force, we have full visibility of the overarching global relationship, the key sponsors within the institutions, any contract negotiations that are going on, any deals that are being worked on. So it's basically sharing all of that data, sharing all of that information, all of the meeting notes and meeting minutes and the contracts that are being negotiated on an online platform, so everybody is clued up and up to the minute, aware of everything that's going on. So we have a holistic view and a relevant view of all our clients.
And I think that's a far superior approach compared to back in the days where you have your stand-up meetings and what was the communication with this client? What was the communication with that client? I find those to be very, very tedious. And having a holistic view on the client certainly helps with the entire selling process.
It's
Thanks
so
for that,
important.
Tom.
No problem.
No, for sure. For sure. And maybe we can jump on over to Nigel. And, we spoke a little bit about the whole compliance process of some of this virtual selling and whatnot, right? What are some compliance challenges you see, and what are some technologies that can be deployed to address some of these requirements from the regulators in this sales process?
Yeah, Vincent, maybe we'll touch on compliance in a little while. I wanted to talk a little bit about the tool, because I thought that was a very interesting topic. And it's good to hear that, what Tom's looking at from his perspective. But when it comes to tools, I think there's so many digital tools available to us. It's a matter of choosing the best components to address, the immediate need that you're trying to solve, or the immediate business issue you're trying to solve as a customer. And then once you have that, how do you optimize the offering and get that correct balance of human and digital? Right? And maybe I can bring up an example of one of our customers in the region. And they were experiencing sort of high levels of fraud. Cyber criminals were able to hijack the transactions or trick their customers with clever social engineering scams. And I'm sure all the people on the call are probably suffering that from their customer perspective. So this organization, they needed to find a way to reduce fraud, but still leverage digital technology as much as they could to reduce processing time and take out that manual component. So what they launched was they launched this program, which we thought was quite interesting, called virtual experiences. And in this, they combined banking personnel as the human factor in the process of onboarding a new customer. But in doing so, they still leveraged all of the digital technology, for example, digital ID verification, electronic signing. But the key differentiator here was the ability to have this process essentially guided by a human throughout the journey. So to ensure that, one of our key technologies that played a big role in this was virtual room. So virtual room, video conferencing and co-browsing technology, and it's not just a Zoom or a Teams call. It differentiates quite significantly with the capability to provide what we call segregated co-browsing. Right? So what does that actually mean? It's really the ability to securely share a document within a virtual session where only one party has control at any one time. So if you think about it, the technology is really emulating a physical situation. So I have a document, I have control of the document, I can explain in that document to you or it could be multiple parties on the call, clarify some complex capabilities that the customers may get stuck on in a normal environment, and then pass that document electronically to that individual. They can then input anything they need to, electronically sign it, and then look at, pass it securely to another participant. That participant could be a witness or it could be another signer in that process. So we find that what they were able to do with this technology was to control that whole digital process and also provide an audited evidence trail. So when you talk a little bit about compliance and regulations, anything you do with a document, whether it be a mortgage or insurance application, that is a legal document, a legally binding document. So there needs to be an evidence trail, and that evidence trail needs to be producible in a court of law if needed. I mean, hopefully you don't get to that stage, but it needs to be there. So I think that was really a great example of where they were able to provide this human-led digital process, and at the same time reduce processing times and reduce fraud. So I thought it was a great example to bring to the group.
Certainly. And I think being able to securely share and transfer these documents are important because of the nature of some of these deals, right? I mean, I don't think going with the usual Google Drive or whatever would be suitable for an industry like BFSI. For other industry, yes, maybe it may be well suited. So this kind of solutions would help the transition to a more remote virtual hybrid kind of selling processes for BFSI. Thanks for sharing some of these examples, Nigel. Let's move on to Ian. What tools are being used actually in Kenanga?
Sure. So as we look at how we further digitize, we're looking at, say, international standards. So how do you do secure sharing of data using open APIs, open banking, those types of concepts. And as we look towards developing new digital channels, we're looking at probably some of the more state-of-the-art or cutting-edge tools and services we can use. Cloud is a key one to give us exponential growth, exponential scale. Looking at how we deliver and service our customers, it's actually quite an interesting patchwork, if you will, because as you look at how we as a bank have worked over the years, we have 50 years experience doing equity broking here in Malaysia. That's very core and integral to us. It does mean, though, I think probably we do have a 50-year-old computer floating around somewhere that's still working. So we have a legacy that we're working our way through. I kid. It's probably not that bad. But we do have a lot of these legacy pieces that we're working on. And how do we get those integrated into a new digital world is actually my challenge. It's what I do on a day-to-day basis. So exactly, it's looking at how we bring legacy tools forward. How do we use open standards? How do we apply them to create new and interesting products?
Thank you for that. So as we transition to a more and more digital world, and I think some of the things that people are saying is that the younger generation prefers a more digital kind of interaction, even though in areas that may require a little bit more human touch. Do you foresee that there will ever be a future where an investment bank would be fully digital, or do you foresee some kind of hybrid of the both? What do you see like for the future of this industry?
Sure, that's a great question, and one we ask ourselves constantly. So, how it answered is there is a blend, it's a mix. I think I said earlier, we always want to be where our customers are. So, what do our customers want from us? Where do they want us to be? We look to be there. So, whether that's through partnering with Rohit and maybe we come up with interesting insurance and investment linked products, or if we are distributing through super apps like we talked about, or even APIs, those are all pieces of that puzzle. But there's always going to be that need for a human touch. So largely how we see the industry changing for investment banking is that you have more and more of, like say, democratic wealth. So it's easier to access wealth. It's smaller, it's bite-sized. You can start investing with as much as the price of a nasi lemak, right, to get you going with that price, and grow your wealth from there. And that serves a very specific niche customer that has its own risk around it. It has its own market risk, its own fraud risk, its own conduct risk. And then as you work your way up through the scale, you get to more complex products. You start moving into what high net wealth need, what family offices need. And that's entirely different ballgame. That's coming back to like what Tom was saying. It's a very unique set of products and skill sets, and that requires that human touch. It needs that white glove concierge service because they need that. And when you're dealing with ticket sizes that large, you have to be able to talk that space. You need to show up in the 3-piece suit to impress them, right? It's how it works. It's just fundamental. So I think we're going to see a range of this. And what I really love seeing is how these fintechs are picking up pieces of it. We often think of, in the investment banking space, we often thought, okay, our products are too complex for fintechs to ever touch. Let the PayPals of the world fight it out for payments, but we're in a rarefied space of investment banking. But we've seen more and more fintechs trying to tackle that. They're trying to make investing easier through robo-advisors. They're trying to make, they're carving out very specific product sets and moving their way through that. And I think that's absolutely fantastic. We can learn, we can work together. And it's all about actually just making it more accessible to people in a safe and compliant manner. Again, I have to be really careful, and I always say compliance on this is very important. I do not want ever to have a situation where a customer invests in the wrong assets and loses everything, right? That's my nightmare scenario. So how do we do it
disastrous
in a safe manner? Exactly. How do we help these new people come on board who really, honestly, they're investing like a nasi lemak price every month, right? They're putting aside one breakfast and investing it. How do we help them make the right choices? At the same time, how do we help those family offices and those corporates make the really big decisions as well?
It's a pipeline, right? From investments that cost a nasi lemak all the way to investments where you require white glove concierge service like Tom's high net worth clients as well, right? So that's kind of the approach, I guess, that's happening as we move forward. You have an entire pipeline of it. Thanks for the insight. Let's move on to Rohit. What do you see for the insurance sector? Do you see an evolution of a pure digital play, or do you see that maybe in the next few decades, physical distribution channels still would play a major role for insurance? Sorry, Rohit, you seem to be muted.
Sorry. Our
No worries. There we go.
current point of view is broadly, insurance is currently divided into three types of businesses. There's standalone business. The standalone business, you buy like motor, home, travel, pet, blah, blah, blah. Then there is what we call embedded frictionless insurance, which basically you sell with something else, and that's where digital partnerships come in. So, for example, we'll sell consignment insurance with an e-commerce player that if your good doesn't reach from point A to point B, then we'll cover it, or we cover the damage. Or same like we do travel insurance with the travel ticket, or we do e-wallet protection with the e-wallet, those kind of stuff. So what we call really frictionless, embedded, small size, large transaction. And then there's the third one, which is advice based, which is whenever there's emotion involved, obviously people look for advice for sure. Now that advice may be in virtual form, maybe speaking to friends, maybe meeting someone. There could be different ways the people do it. Then maybe you might use a robo advisor for the first phase and then go for something else later. We've seen that even on our side too, right? We have a manned WhatsApp and we have a chatbot. The ratio tends to be much higher for a manned WhatsApp. So chatbots still have some way to go. Coming back, I think broadly my belief is 1 and 2 will be largely moving into digital modes of distribution with very little advice required, right? Low involvement products like motor, home, travel, PA, and all these really small size products. There's no distributors really wants to look into it. The advice based products, I think agency and traditional bank assurance models will continue to be really relevant because A, relationship matters, B, advice matters, C, there's emotion involved. So you want someone to, explain things to you, go a little deeper. And by nature, as much as our tagline is insurance simplified, I think is largely restricted to the digital modes of distribution. Some of the larger products, financial products, are quite complex, and it's not that easy to just deliver them online. Having said that, we have seen some examples of people actually even putting universal life online. What is the success of it in China? I don't know, but it's quite a brave decision. For me, it feels too far at this point in time, but you never know. We can't hear you, Vincent.
You made that mistake, then I made that mistake.
No problem.
Happens to all of us.
Yeah.
I think what you say is true, right? Particularly with smaller ticket items, it's just the economics doesn't make sense for physical distribution channels at all. But of course,
I'll just add one point right on that
yeah.
one. So we did about 600,000 B40 policies in the first 6 months of the year. B40, borderline M40, whatever you want to call it, lower end of M40. There is no way I could have distributed that through traditional modes of distribution, because who's going to go and sell one by one a 50 ringgit, 70 ringgit policy? They're going to earn 10
Sure.
ringgit commission. And clearly the mode of distribution was large access to large partners who have access to customers, and then digitalizing the process and going through that fine tuning. So obviously, I think different folks, different strokes. It boils down to
Certainly.
that.
Thanks for the additional context. For the audience members who are tuning in, who are not dialing in from Malaysia, just for some context, B40, M40 is how we categorize demographics in Malaysia. So B40 would be the bottom 40, M40 would be the middle class, basically the middle 40% of the demographic. So that's the stats that Rohit was sharing earlier. Thanks for that, Rohit. And I think of all of us in the panel today, the one that is probably most complex and most difficult to ever see a fully digital kind of transition would be Tom's line of business, right? So Tom, do you ever see your line of business ever being fully digital, or you think it would largely be a high touch physical kind of sales distribution channel in the next few decades?
So I think it will continue to be human. Digitalization will support it. But if I put myself in the shoes of a retail customer who buys insurance, absolutely, I buy it online without speaking to anyone for my home contents, etc. But in my world, I deal with financial institutions, the custody, the fund administration, and these are big decisions for these banks and these hedge funds and these asset managers, insurers to make. And absolutely will continue to be human, physical interaction from a sales standpoint. But the areas where digitization will play a huge role and continues to do so will be on the implementation and the onboarding. And that could be data replication, whereby they may be need to contract with a new regulator. So there's going to be a huge digitization process which will be automated to just take the pain away of it, onboarding and administration. And that's something the bank's doing a lot of. So a huge amount of digitization there, but not from a sales standpoint per se.
Segues nicely into my next question. Maybe I'll direct it to you first, right? And I think onboarding process can often be a painful one for the BFSI sector. Are there any opportunities or any aspects of the sales and onboarding process that can be better digitized for a better experience for customers, you think?
Absolutely. And historically with onboarding, there's a lot of paperwork that needs to be populated, which is time consuming, which people just don't want to do. So what we do is, I mentioned CRMX earlier. So through a sales process, you could actually create lots of data. And most of the institutions we work with are already clients. So we've already captured that data. So it's about taking that data, pre-populating forms for various vehicles that clients are using, whether it's China Access or QFI, whatever it may be, so that they then, all they have to do is ultimately cross-check that data to make sure it's accurate and then sign it electronically. And what we've actually done with a number of the regulators, Taiwan is a good example, is we've actually lobbied the regulator to permit electronic e-signing compared to wet ink signatures, which has been the case before, particularly during COVID times when it was, very difficult for people to give wet ink signatures. And that's had a really, really big impact for our clients, which has meant much more speedy onboarding and obviously access to the markets that they want to have exposure to.
Thanks for the insight into that. Let's move on to Nigel, and of course, this is an area that OneSpan develops and focuses a lot on, which is onboarding, e-signatures, and whatnot. What opportunities do you see for improvement?
Yeah, thanks, Vincent. Look, there's a number of areas that I see our customers struggling with, and working out how to provide a more automated digital onboarding process. And I think there's two key ones. One is firstly identity verification. So, as you'll be aware, strict anti-money laundering and equivalent regulations dictate that any person that we're doing financial interaction with, we need to correctly verify their identity. And each country will have different laws around that. But most of it is around, hey, how do I ensure that this person is a valid citizen? How do I ensure they don't have a criminal history? All of those sorts of things. They're not a politically exposed person, etc. So trying to do that manually adds a lot of cost and complexity, both for the organisation and the individual. And from an individual perspective, it's cumbersome. Now, you mentioned earlier about, do we see a future in everything being digital and not physical? I thought to myself, I struggle to answer that, because you say, well, is the future digital? I wouldn't bet to say no, it won't be 100% digital in the future, because would I have 10 years ago said that I could verify my identity on a telephone, on a mobile phone? I wouldn't have envisaged that, right? So in 10 years' time, it could be fully automated. But so identity verification is something that people are struggling with. There are now technologies that allow you to do it on your phone, but it's essentially a disconnected process. So they tend to have to do it, and then once that's finished, they start another process. So what we're doing at OneSpan with identity verification is we're building it into the overall digital agreement process, where it's integrated natively into that transaction. So I can initiate a transaction, let's say for you to do a loan application, and when you receive that, you start filling out information, and then it triggers and says, oh, we need to verify your identity. You go off and do that on your phone, and then you come back into the process in one clean sweep and complete filling out the form, and then electronically sign it. So that takes a lot of the friction out of the process, and it's something that we think is quite unique in the industry. Integrated IDV into a document. The second area I see that customers are struggling with is static forms, PDFs that companies are asking their end users or prospective customers to go onto their website, download it, fill it out, wet sign it, scan it, and send it back by email, or even worse, send it in the post. So this is, we think prior to COVID, this was common, and we weren't even really considering how we optimize that. I think COVID, the good thing about COVID, it's forced people to try and move into that digital process and make things a little bit easier for their end users. So, that area of taking a static form and making a dynamic form, it's probably the easiest area to address. There's modern no-code technology out there that allows the forms to be, smart, active forms, consumed via the web or even on your mobile device. And you get it like an interactive interview style. So you just answer the questions that are necessary, and it jumps you to the appropriate part in that form. So you don't see this big ugly form that you have to, drag through and find out what do I need to fill out and where do I need to fill it out. So that technology can easily address that. And I think that's something that people have been very slow to address that. Even with COVID, they've been a bit slow to address that. I mean, recently we worked with a superannuation company in Australia, and superannuation is a retirement fund, or in Singapore context, it's a CPF. I'm not quite sure the equivalent in Malaysia, but more about when you want to stop work and retire, there's a big fund of money there for you. So this organisation was struggling with that exact issue, but after deploying the sort of smart forms capability and integrated IDV services, that they did both at the same time. They integrated the IDV service, they deployed the smart forms capability, and really what they saw was a huge reduction in the number of escalation calls to their contact centre. Now, I don't know if you've ever called a contact centre, but it can be sometimes not a great experience, excluding the companies on this line, I'm sure. But I know airlines, for example, I've had some bad experiences. But so reducing that number of calls to the contact centre, and then what it also allowed them was to increase the number of forms that they were successfully processing each month. So I think if those two technologies can be addressed, the IDV and smart forms, in one complete format, it'll go a long way. It's not solving the world's problems, but it'll go a long way to helping that whole digital enablement and lowering that touch.
I think your point about the static form resonated with a lot of the panelists. I can see them nodding and smiling in agreement. I mean, the other point that you brought up is that sometimes it is quite difficult to predict the future, right? Whether everything will be digital. And I think humanity historically have been very bad at predicting the future. I mean, who knows, right? Maybe a few years from now, much of Tom's business might be done in the metaverse, and then you guys have to develop some kind of onboarding solution over there. Who knows? Nobody knows where the world is going these days.
Well, you're talking about, I'm a little bit off subject, but talking about the metaverse, I was looking at this concept the other day where you can have this digital alter ego in the metaverse in Web 4.0. So I could have, I was thinking about that. I could have a digital version of my wife. I could buy her an NFT, which is in the form of a Gucci handbag, all paid for on blockchain distributed technology. So it's possible. It's out there.
But I think just on this point, Vincent, if I can add, right?
Go ahead.
I think
sure. Absolutely.
Yeah. So if I had this, one customer complained to me on LinkedIn saying, I do everything on a mobile app, but I realized I bought the wrong product and I want to change the product to another scheme. And unfortunately, he can't do it on the app. And we sent him a digital PDF to fill up, and then we were like, how did that happen? So that's why I was, having a laugh saying, okay, I hear what you're saying, because we say, you can do everything on our app, right? But there are situations that, and then we find out why we can't do it because the ratings changed. Anyway, the long story short, we all have these lovely digital PDFs flying around in emails.
But it's a learning process, right? To know what we can and what we cannot do digitally, and how do we improve some of these processes to be able to enable it or to make the human intervention a little bit less painful for some of these processes as well.
But it's constant dialogue with the regulator as well, Vincent.
Certainly.
That's an important angle of this whole change journey, because the regulators are also going through an even bigger scale of change management than many of us in our corporate organizations, because if the regulator doesn't change, none of us can change, right? So the good news is with digital insurance and some of the stuff that Bankita are doing, it's quite positive for us. But I mean, even for them, they have several lenses to play. They have a consumer protection angle and various angles to play. So AML is a very interesting topic, because I think in a way the world is getting more complex on AML. And in that backdrop, how do you sell different kind of products, and where is the risk? And to the point, earlier mentioned, where do you automate? Where do you use tools? And some of these tools, even on a SaaS basis, are not cheap, at least as yet. Some of the famous databases where we have to hit to check a customer is like $1 a customer to check the data. And when you're selling, when you're selling a 50 ringgit policy, that's 4 ringgit. How do you expect me to go and check? So again, that's a change journey we have to go through.
Yeah.
So obviously, that's where healthy debates happen around accumulation of risk and when is the best time to do this analysis and so on and so forth.
Yeah.
I think that's a huge space where
Mm.
there's a lot of automation required because today I completely agree. It's quite manual. There are robots, there are
Mm.
systems you can buy off the market, but
Mm.
it's still quite manual in the back, and that frustrates customer experience as well as distributor experience.
Yeah, sometimes only the front end looks good, right? But there's a whole discussion about change management in regulators, and I think that's a whole topic for another day. But let's circle back to the onboarding process, and then later we'll jump back to Ian to also get his views as well, and then maybe we can get some Q&A from the audience. So, I mean, if any of the audience member would like to ask any questions, please fill it in the comment section on YouTube, and then we'll get to it the soonest. So, circling back, Rohit, in the insurance sector, do you see any opportunities to improve the whole onboarding, to streamline the whole onboarding process?
Massive opportunities. I
Mm,
think
mm,
on the e-commerce side, I think it's already starting, right? You can go online and
mm,
buy in 3 minutes. In fact, our promise is a 333 promise that you can buy from us in 3 minutes on an app or website. But as the products get more complex and requires advice, service, etc., there's a lot of work to do. I'll give you it's not just onboarding, it stems across the board. It's also renewal sometimes. Our processes are not that simple. And the reason why it gets complex is because, unlike some of the other industries, we are not talking to one database or one system. We have to check AML, we have to check sanction, terrorism, finance, terrorism, our own blacklist. We have to then check credit, check. Sometimes we have to check past claims data. There's a whole host of things that we're hitting at the same time. And it's not as simple as just putting an API in and just hitting it and saying it's a yes answer, because there's a lot of subjectivity also in the decision. If it's a black, of course it's a black, you don't underwrite the person. If it's a white, it's okay. But actually, there's a lot of gray sometimes. For example, accumulation of sum assured. Somebody
mm,
who's earning 100 cannot buy, say, 1,000. But there are situations when you do provide it because there's a justification
mm,
around it. So I think there's a lot the industry can do in simplifying the onboarding process. Because one of the frustrations I think a lot of us face when we buy a very simple health insurance product is we buy a health insurance product, and the minute it's above a certain sum assured, you have to go for all sort of medical tests. And invariably, you've probably done a medical test, at least I do every year. And I keep asking the company, why can't you just use the one I did, right? And they say, no, you need to go back and do it. Now, finding that time to go and do a medical test one day in the next few weeks is quite a harrowing
quite a
experience.
challenge. Yeah, no,
Yes, and
sure.
for the agent, it's frustrating as well because the agent's saying, hey, you know what? I can't onboard this policy. And then we get into debates of what happens if there's a claim in between this. Is it fair to the customer?
Mm,
So I think there's a lot we can do in terms of how we use data in the industry, for sure, and how we can simplify a lot of this onboarding process. It's not
mm,
just financial, it's nature, it's financial, health, background check, several elements. And I think that's where partnership plays a big role. Um,
mm,
I heard the story of one of the digital banks who said that I want to be your second bank. So the minute you come to me, I will basically send 10 cents to your main bank. And that basically shows me that you're
uh-huh.
compliant. We can go,
Right,
right? I'm sure
right.
you heard who that is.
Mm,
But I think that's a very interesting way of how they have managed the compliance situation. Um,
mm,
do we trust each other? For example, when we have a bank
mm,
partner, we apply our own logic on top, and the bank's already gone
mm,
through all the sing and dance, right? And we apply
mm,
another sing and dance on top, so the customer experience is extremely broken. So for me, I think onboarding, there's a lot of work to be
mm,
done as an industry to simplify it, and there's a long way to go for sure, especially for high net
mm.
worth and medium net worth products.
And I think there's something to be said about infrastructure as well, right? With certain countries like Singapore, they have the SingPass, so a lot of these things are available through a centralized depository of this information. And in other countries like Thailand, I mean, what you said about that use case is codified into the regulation where banks can share each other's eKYC. That would, significantly simplify the entire onboarding journey for a lot of customers. Certainly a lot of pain points you mentioned that I've personally experienced as a customer. So I'd love to see some of those solved as well. Let's jump over to Ian. Ian, what are some opportunities that you're seeing in this space in terms of, simplifying and making the onboarding process a little bit less painful?
Sure. So when I look back to KDI, that's our new retail savings account and robo-advisor that we launched back in February of this year, the fundamental goal there was to make it simple. So you can literally start investing by answering basically just 3 questions. How old are you? What's your horizon? And how much risk do you want to take? And from there, we can calculate portfolios and get people on board. But that's the interesting part on the investment side. But going back to the very beginning, we consciously tried to avoid Nigel's massive static forms. And I'll put my hand up and say I have seen the forms that we use traditionally. They are massive, they are long, and they ask you everything under the sun. And when we dive into why, 2 things come out. One is because we just don't know if we're ever going to need the data. The regulator might ask in the future, so let's just ask it now in case we ever need it. And second is, maybe they'll want some other products down the road. Maybe they're signing up for equities today. Tomorrow they might want unit trusts, or maybe in 10 years' time they might want options. Well, let's ask it now. So it's one massive form that basically covers everything we could ever possibly ask. And so when we designed KDI, we said, no, let's throw that all away. Go back to the absolute minimum. Do the very, very basic to get us going. Not perfect. I mean, we still do ask some future questions to help with future products, but it's mostly there. We fought the urge to make that massive static form, and it works. We've seen a lot of uptake. There's been a lot of interest in signing for the product and joining, and we've seen it change how people invest. And I think that's definitely the future. It's doing those dynamic forms that explain what you need, when you need it, stepping up. So like Rohit's example, where maybe you can get a basic health product policy, and then if you need to step up, then you provide that extra level of information. And it's natural, it's progressive. You step your way forward without forgetting anything you've done in the past. And also that's another challenge that we do have sometimes. So even though we ask you these very long forms with everything inside, if you turn around and go to another agent, you might end up having to fill out another different form, because we don't always share that information. And that's something that we're working on, right? We're working on how do we do that better. And actually some really interesting products that will be coming out soon that help to address that. So it's a natural progression. It's a natural growth area for us. How do we do this? How do we make it simpler? How do we make it more online? How do we make it more active and reactive to what our customers need?
And I think, whether it's physical or digital, the experience on onboarding is super important, right? Because at the end of the day, it's your first interaction with your customer to decide, whether or not they want to take up your services. So certainly an area that could see some improvement around various lines of businesses in the industry. And of course, for simpler retail investments like KDI, there's no need for so many complex answers and forms, right? It's all got to be proportionate. Well, thanks for those insights. Again, we are open for some questions from the audience. If you guys have any, feel free to direct them to any of the panelists here today via the YouTube link. There is one question for Rohit. Let's see, what's the question here? So the question is mostly asking about having a drive-through kiosk to sell insurance. Is that a practical model to sell insurance, Rohit?
Good question, actually. I was just seeing George Kesselman's LinkedIn today. He put that in Japan, they still have those kiosks. You can buy travel insurance at the airport. We have it as well in some of our airports as well with our partners. Now coming back, the kiosk idea, the question is, what are we trying to achieve with the kiosk that a mobile phone cannot do? And if you need advice, then a kiosk is not going to help. If it's digital, I think the best thing in the room is this mobile phone, right? So that's what where most of the change is happening. So do I think a kiosk per se has a market? The answer for me is I don't think so. I think there's other ways of distributing it far more efficiently. But if the question is about what are the other ways other than digital, for sure, I think that's where partnerships come in because, for example, we work closely with associations. We work closely with organizations which have access to this customer base. We even work with, any sort of organization which has access to this customer base and has affinity, more importantly, then we can build on that affinity and sell to their base. So it's essentially about what are we trying to achieve. So the literacy levels are quite low when it comes to the property segment. So there it's about keeping the product very simple and for them to just know if I pay X, I get Y. That's really how they see it. Obviously, we tell in insurance never sell a claim, sell a benefit. But you can't sell it that way. But if you go to the mid net worth, high net worth, it's different. It is a proposition. There we are talking about what's the product, what's the price, what's the service we are offering, what's the promise is much wider. Because there, as you get into especially M20, T20, which is the cream crowd, if I may say so, the penetration levels are very high and it's a red ocean, right? So there the awareness is much higher. So there they look at things like price, convenience, coverage, etc. So I think the mode that we choose for distribution is also a function of which customer segment we are talking to.
Sure. And also which line of business as well, right? Because certain lines of businesses in BFSI, I'm seeing the kiosk model working out pretty well, but perhaps not for insurance. It might not be the suitable kind of channel. Thanks for answering that question. So if we have no more questions from, Rohit dropped off right as I finished answering the question. Perfect timing. So if there are no more questions from the audience, maybe we can move on to some closing thoughts, some predictions about the future. Since we have Tom on the screen right now, Tom, what are some closing thoughts you'd like to share with us today?
Thank you. So from my perspective, I think digitization will continue to play an increasing role in the sales process. But I never think, particularly in the area that I operate, it will take away from the human component. I think that will always be there. And for me, sales is the oldest profession in the world. And digitization will continue to be a big part of that, but it won't replace it. I think the area that it will replace, we've obviously spoken a lot about that with sort of the smaller size deals, mainly business to retail customers. I personally buy a lot of things, whether it may be insurance or investments, without any human interaction. But obviously, the bigger the deal size gets, you need that human connectivity. I think sort of point a lot can be digital, where it can be, WebExes and things like that. But then that physical handshake, that physical relationship, the dinners, the lunches, the human interaction will always be there on the larger scale, the larger deals.
Certainly, right. But I mean, I guess as we move forward, the world will be a little bit more hybrid. Sometimes dinners will be good. Sometimes if you just need a quick interaction, a WebEx would do the purpose as well. So, it's the kind of world
Indeed.
that we are.
And with COVID, I do agree with some of the other comments. There have been some positives out of it. I mean, I joined the bank, to give you an example. I joined the bank in April of last year. It was always a Hong Kong role, but I was in London. It was challenging to get over to Hong Kong. And before COVID, I would have been picking up the telephone and speaking to people in New York, Boston, Singapore, Hong Kong, Thailand. But people now are less reluctant to turn on their video, which is great. Historically, people would never have shared their video. So I think there are positives, and that's something that I'm doing, obviously. All the calls, it's never a call, it's always a video discussion. So that's an example of digitization that we are doing a lot from a sales standpoint, internally and also with clients.
It's become so second nature. Well, thanks for that, Tom. Let's move on to Nigel for his closing thoughts. Nigel, what are your closing thoughts and final sharing?
I thought the conversations have been great. I thought I would just mention a little bit about when you're moving to that sort of whole digital process environment. I think the human factor is seriously important. And I agree with Tom. Hopefully we won't become redundant as humans, and it won't be all digital. But I read recently statistics around abandonment or dropout. I'll say dropout because it rolls off the tongue a little bit easier. And it was something like 25 to 45% of digital transactions experience dropout. Now, the other side of that, it said that if that same transaction commenced at a branch or via a contact center, the dropout reduced to 5%. So I think that really calls out the importance of a human in the process somewhere, whether it's at the start or whether it's at the middle or some junction where it's needed. But it probably comes back down to understanding your customer, the customer's needs, and how they want to communicate. So are your customers in the sort of millennial or a baby boomer demographic? So, for example, my son, he doesn't want to talk to a human. He'll avoid talking if he can, right? So maybe he's much more digital. But a lot of people are not like that, and especially if it becomes a complex environment, a complex transaction, you really do need some human interaction. And if you think about other areas, we've got a bank in Australia that's bucking the trend, right? They are actually opening new branches. And why would they do that? Because they understand their customer, right? They're in a regional area where most of their customers are farmers. These farmers, they may not have the technology to do the digital transaction. They want to talk to a human and not necessarily an animal, right? So it really is about understanding your customer and understanding the balance between human and digital and where it works best. So I think that process that we've been working with our customers as well, where you can have a digital process, but you can kick off that capability to inject that virtual human interaction where needed, whether it be the start, the middle, or the end, or in some cases it might be just need to be physical. But it's reducing the dropout rate and then increasing your efficiency of closing business will be the key.
I mean, it's a good point, right? At the end of the day, you want to serve your customer where they want to be served, how they want to be served. And as long as the economics check out, that's something that I think not just BFSI, right? Any business should do. Thanks for some of the thoughts that you shared with us today, Nigel. Moving on to Ian and then Rohit. Ian, what are your closing thoughts with us for today?
So we talked a lot about how to do, say, digital distribution direct to retail customers, and that still is something that Kananga is exploring. It's definitely one of our big bets for the year. But I think actually what's also really important to remember is we do have a very, very important remiser and agent pool. These are people who help us reach our customers. And just at the same time as we're looking at how do we onboard a digital customer seamlessly, how do we make it easy for them, we're looking the same for our remisers. How do we bring them on board easily? How do we get them the right tools, the technologies, the insights into their customers to help serve their customers? How do we get them good qualified leads that will actually go somewhere and not just extra details to work through? They're really important to us, and they will continue to be important. So we're looking exactly at customer experience. We're looking at agent experience and remiser experience, and how do we empower them to really reach their customers in new and unique ways. So it's multiple steps, multiple ways. I mean, I said before, we want to be wherever our customers want. Many of our customers still want agents and remisers. It makes perfect sense. I totally agree with that approach. But if you want your basic products, come over to the digital side. We'll give them to you as well. Every door remains open for us, and we want to be where our customers want us to be.
Certainly. And as long as the experience across all these channels remain consistent, I guess that's the key point over there, right? Once again, Ian, thanks for your thoughts. Moving on to Rohit for his final thoughts today.
I think both modes of distribution will be relevant. We live in a world where you ask a 20 or 30-year-old how many of them want to come to office, and we can argue. We can argue till the cows come home to explain to them why it's important, etc. But the reality is, they think how they think, right? The world is changing quite quickly, in my view. In 10 years from now, people like me won't be running businesses. and the people who run businesses are going to think very differently because they consume it very differently today. So when they become leaders, they're going to think differently, just like a lot of us did as well. So my own belief is, insurance consumption will change quite dramatically. I do believe, like Tom said, that high net worth business, large ticket business will continue to be advice based, but heavily digitalized. But I think, the low value, less emotion products would absolutely move to digital modes of distribution, and even more so. I think where there will be a little bit of change, which I think some companies are doing, some are talking, is we are not using enough data to empower the sale process. We are only using our internal data. We tell them this is what I know about the customer and this is what the databases tell. But I think there's a future where we'll have a lot more social media data integrated into our data to know a lot more about the customer. So I think there is a world where a lot of these complex products can also be simplified a lot more. But I think advice will remain relevant because you still need someone, to give you that additional layer of comfort. The fact that for every 4 queries that goes to our chatbot, 50 or 60 goes to our manned WhatsApp tells you there's still some time to go before that area can develop.
Certainly, I mean, it is a journey. And a lot of the points you speak to is quite geared towards open finance, open data, and one day when consumers have the ability to consent to sharing whatever data they have with whichever provider they want, I think it would make for a much easier world to be able to serve these customers a little bit better. A lot of good points brought up today. I'd like to thank Tom, Nigel, Ian, and Rohit for sharing their time with us today. And I can see over 100 of you across LinkedIn, YouTube, and Facebook staying with us till the end. Thank you for tuning in. With that, I wish you guys a good day and see you again next time. Thank you for tuning
Thank
in.
you. Bye.
Bye bye.
Thank you, guys.
Thank you. Thank you.